Good morning, Wall Street winners. It is Friday, April 5th, and it has been a volatile start to the week and the quarter. We've seen some incredible volatility yesterday in the afternoon. We heard from Neel Kashkari talking about the likelihood that interest rates may not come down at all in 2024, let alone by one or two cuts. He was saying that based on where we are and the strength of the economy, that there may not be a need to cut rates by the Fed. And that caused the markets to just plummet at the end of the day and a huge sell-off to occur. And huge sell-offs can be, not always, but can be a good long-term buying opportunity. So if we look through what happened yesterday and where things settled. I mean, Lululemon, I said it was on sale a few weeks ago at $390. This thing is getting down into an extremely reasonable range than it has been in the past. Great retailer, lots of likely continued success, and we're just seeing it had a bad forecast, but if the numbers and the economy are where the numbers indicate, I think that we're going to see a pickup in retail spending as consumers are going to want to go out and purchase new goods, and that's going to help things like Lulu and like Nike and other retailers like Home Depot and Walmart. If we scroll down a little bit further, one of the things that we're seeing is we saw an announcement this morning that Saudi Arabia has increased the price of crude per barrel by $2 for, I believe, Asia. So that is definitely going to drive crude prices, or is likely to drive crude prices higher, and we're seeing that reflected in some of the oil stocks this morning. So one stock, Valero, that I'm in favor of, took a bit of a dip yesterday. I bought that at the close on the dip, and it's looking like it's up $1.69 pre-market right now. Exxon on its way up to 120. And a number of the others climbing as well. So this is probably still a good sector to maybe stay in as crude prices increase. The fear and the risk here is that somebody in OPEC or one of the other oil creating countries that may affect OPEC but not be a part of it announces crude price reductions. But I mean, there's risk everywhere. If we look at the tech market, we're seeing that it fell off a curve yesterday. The NASDAQ dropped significantly, but a lot of these are moving back. Whether they move back to the amount they dropped yesterday and even beyond that is really the question, because these have been coming down. Palo Alto, PanW, up $1.73 pre-market, but down 4.5 yesterday. Reddit was off yesterday, $1.21. It's up 10 cents. I'm not a fan of Reddit. I would be shorting that in the 3-month range there. CRM is a steal when it dropped into the 290s yesterday. I picked some of that up. It's up slightly pre-market. And then as we scroll down further, Microsoft wasn't down a tremendous amount, super stable, strong company, and up beyond what it was down yesterday in the pre-market. ARM dropped yesterday into the low 120s. This is likely going to get up into the high 120s. This could be an attractive purchase for a quick percentage gain, even on the day today, if not a week-long hold. AMD was way off yesterday, and with a computer refresh cycle very close, if not already started, I think this is a good play. And down at this price, I think it's a super attractive entry point. If you are on a platform like TD, Waterhouse in Canada, you can buy some of these US stocks as a Canadian hedged version. So if you type in the symbol when you go to buy, there'll often be a Canadian version that's hedged in with the American. So if you only have Canadian dollars to trade, you can trade in those. And that's an interesting way to get in because, for example, with a stock like NVIDIA that's trading in the $800-900 range, the hedged version is about 10% of that. So you're down around the $79-80 range or $80-90 range. So it makes it a little bit more affordable to get into. And they have those for the big names. Meta, another one. Meta hit an all-time high at, I think, above 526 yesterday. And it then dropped a little bit with the market, but it looks like it's coming back pre-market. You've got NVIDIA, which was way off yesterday, down in the 159s. It's a bargain, I think, at that price. It should get back up to the low 900s in no time. It's up $8 pre-market. Google was off yesterday with some news that came out there as well. A couple of different points. They're looking at acquiring HubSpot, and usually the acquire takes a bit of a dip, whereas those being acquired usually get bumped. So HubSpot was up significantly yesterday on that news. And then Google's news about potentially charging for some of its Gemini integrated, AI integrated searches, which hasn't been announced, but I think is just being mulled over and considered. And then we get into financials. So SoFi dropped yesterday down to the 730s. I think it's a steal at that price. I think you're going to see it go to 9 within less than 2 months, especially around earnings. And they report earnings, as we can see here, on the 29th of April, so the end of this month. If we look at some of the others, JP Morgan, again, one of the first to report earnings. I think in the low 190s, this is a steal. It might even be a good price at 195. It should continue to go higher with those results. Morgan Stanley at 92. I bought a little bit of that and some options on that for it to hit 95 within the month. And then Goldman dropping down into the 406. I still think it's a little rich at 406. I would hold off on that one. But again, it was up into the 14s or even close to 420, I think, earlier last week in the last 5 or 10 business trading days. So that's where we are today. Good luck with your trades, mitigate your risk, and like and subscribe if you're enjoying these videos.